Good evening, everyone. I hope you are doing fine. So kindly, if you can hear me, if you can hear my voice, just type hi. Let me know that I'm clear on the other side so that we can start. So if you can hear me, let me know. Type hi so that we can start. So welcome everyone on board. Today we are going to cover trading employment. Thank you, David. Thank you everyone. So you're welcome for this session. Today we are going to cover trading employment data, and my name is Michael Waithaka. I'm a trainer at FX Kitengela. I've been training here, and we were supposed to be with Edwin on this session. Edwin won't be with us, so I'll be taking you through the session. If you'll have any question, kindly as we continue, let me know so that I can answer. So today we are going to cover trading employment data. We want to know how does employment data affect the market. By the end of the day, it's good to understand that whatever you are trading, basically, most of the time is the prices. Let's say like currencies. So you are trading a currency of an economy. Probably sometimes you're even trading stocks or even indices. They belong, of course, to a certain economy. And it's good to understand that if, for example, you are trading Kenyan shillings, and then maybe you want to buy the Kenyan shillings, it means that you expect the Kenyan shillings to be strong. And if probably you're going to sell the Kenyan shillings, then it means you expect the Kenyan shillings to be weak. So by the end of the day, we say that you need to have a clear reason. You need to have a good reason as to why you are taking the kind of order that you are taking, so that we try to eliminate gambling in the market. And one of the key factors that drive this market that we do trade is the economic factors. So economic factors, they do play a bigger role in the market, especially in the Forex market, meaning if we have an economic factor that indicates that a certain economy maybe is not doing so well. So probably it means even the currency of that economy will be depreciating across the board or even against some other currencies. And it goes all the way to even some stocks. So employment data is one of the economic factors that shows us the direction of the market. And that is what we are going to cover today. By the end of the day, we have a number of them, a number of economic events. So kindly go and do more research and understand the others that we have. So when we talk of employment data, it refers to the both the number of employed people as well as unemployed in an economy. So that is what we talk of employment data. So this data, by the end of the day, gives an overview of the labor force in an economy. And then the labor force utilized in an economy determines several factors. One of them include the estimated spending in an economy. The spending of a household means a lot for an economy. Basically, it determines the circulation of money in that economy. Again, the employment data also determines the GDP, that is the gross domestic product of a given economy. And after that, thank you. You're welcome, G-Squad. After that, we have investors' interest in an economy. So this employment data is a key factor. It determines the estimated spending in an economy, the GDP of an economy, and again, all these, they create interest for investors, and that is what we are interested in as traders. So the above factors, they determine the currency demand. If, of course, investors are interested in a certain economy, then it creates demand for that particular currency. And again, if investors are not interested in a given economy, then, of course, you expect supply for that particular currency. So let's start with the estimated spending in an economy. So how does employment data determine the estimated spending, or how are you able to measure the spending of an economy through the employment data? So a high number of employed people in an economy indicates income for most of the households. So if we have a bigger number of employed people in an economy, okay, then it means almost everybody is getting a pay somewhere. And if almost everybody is getting a pay, let's say a family, a household has maybe 5 guys who are employed, then by the end of the day, you expect that particular household to have enough money to spend, maybe to do shopping, some luxury and such and such. So if households have this income, then there is money for spending. That is what I'm trying to say. If maybe you have 5 guys employed from one household, then probably one will pay rent, another one will sort some school fees, another one something, and then by the end of the week, they'll go for luxury and such. So we have that money that tends to circulate in an economy. So this creates the circulation of money that attracts investors. So once there is circulation, then I'm aware that if I'm an investor and I invest in that country, then of course the citizens have money to buy my products. If it's services, citizens have money to pay for services. So you find if there is high spending, it tends also to attract investors. And so for investors to invest in that economy, they will need the country's economy, that particular country's economy. So basically, you can see how it's creating demand, how the employment data has all the way gone through spending, and then later, by the end of the day, attracting investors who buy that currency, creating demand. And once currency has a demand, we expect it to be strong against some currencies. Okay. Welcome, Edwin. So as I said, if you have any question as we continue, you can type it, I'll answer. So the second one is about GDP. That is basically the gross domestic product. It's the monetary value of all goods and services produced within a country in a given duration of time. Of course, if citizens don't have money to spend, if the employment is down, then you don't expect much production in that economy, which leads to a low GDP. But if an economy has that spending, the spending is high, the employment rate is high, there is that money circulation in the economy, then of course we'll see the GDP rising. Okay, now for an economy that created high employment opportunities for its citizens means there is high spending. That is what I've just explained. And if there is high spending, okay, we can see the GDP is high, meaning there is high spending, there is circulation of money in the market. Then it tends to attract investors and still encourages manufacturers to invest in that country. So this creates demand for that currency, since any investor would want to invest in such an economy. So investors also monitor closely the GDP of an economy. If maybe we have Kenya, the GDP of Kenya is shooting, is rising, maybe 3 consecutive times, then every investor will want to invest in Kenya because the GDP is rising, meaning the economy is healthy. And once we attract these investors, we create demand for our currency. Then at that point, we will expect the Kenyan shillings to be strong. But if things are vice versa, then it means we will see maybe that currency depreciating in value against some other currencies. Okay, so that is how employment data has gone all the way to determine the gross domestic product of a country. And that gross domestic product then tends to affect or even to determine the decision that the manufacturers and the investors are going to do in that particular economy, hence creating demand or supply of a currency. From there, so how do you trade this employment data? I think I've already touched a number of it. As a trader in financial market, we monitor closely the employment data of major economies. And after that, we are going to the charts and see what has happened. Like today, we had some employment data. So we are going to see what has happened, how has it affected the prices, and still on Friday, we are going to expect some employment data. So what will we expect if and if what happens? Okay, so the major one is the US employment data, known as non-farm employment change, what we call NFP. Most of the time, you'll hear some traders talking of a payday, because they expect that particular data to cause a big movement in the market, or even to cause that volatility in the market. Okay, so once we have the major employment data from major economies, then it tends to shake some of these currencies, including USD. So if employment data is positive, I mean, this thing is not complicated. If the employment data is positive, then we expect the country's currency to gain strength over other currencies. And of course, for high unemployment, then we expect the currency to depreciate. It's that direct. Okay, it's that direct, as I've explained. So I think from here we can now go to the charts. So I'll start with the economic calendar. We'll start with the economic calendar so that we can see what has been happening. Okay, so I hope you can see. So kindly a minute. Just type hi. Let me know that you're on the other side so that we can start. Okay, so I hope you can see my calendar. Today being on a Wednesday, we had ADP, non-farm employment change, at around 3:15. That was US ADP non-farm employment change. Then at 3:30, we had GDP, prelim GDP. So I think by the end of the day, again, you can see GDP going hand in hand, even with the employment data. Okay, so at the moment, if you don't know how to interpret this data, because I know maybe some of us have interacted with this calendar, but again, some of us, maybe it's the first time. So if it's your first time to interact with this calendar, kindly, whenever you want to understand the economic events, you can use Forex Factory calendar. We have a number of them, but for me, I prefer Forex Factory. So at this point, what you will do, you click this folder. And once you click this folder, you will have extra information about that particular event. And you can see the estimated change in the number of employed people during the previous month, excluding the farming industry and the government. That is why it's called non-farm. So we exclude the farming industry. So what you're interested in is the usual effect. Actual data greater than forecast is good for the currency. And now we can see that the actual data that was released today was 177,000. Okay, so meaning for the last month, US created 177,000. So the estimated value, whatever was being forecast, was 194,000. And the previous value was 371,000. So as you can see, that was a decline. Actually, it was more than even expected. So following the usual effect, then it means this data was negative for US dollar from 315. So any trader who is here, I believe you expected maybe a dollar to weaken from 315. Okay, then we can see a support of that, of the GDP. Remember, we have talked of employment data and GDP. We can see even the GDP data was lower than expected. So it's the same. Actual greater than forecast is good for the currency. So we can see the previous data. The previous readings were 2.4%. Expected readings today were to remain the same at around 2.4%, but things didn't work as expected. It was lower than expected at around 2.1%. So through whatever you can see here, then today we expected US dollar to weaken at around 315 and 330. Okay, so what we are going to do, okay, so I can see Victor is asking a question. How do we read the NFP to know how the market will move on Friday? Now, before the NFP is released on Friday, we have the ADP released on Wednesday. ADP is mostly a forecast of what is expected to happen on Friday. So as you can see, it's the estimated change in the number of employed people. So this one somehow enables traders or even investors to predict what will happen on Friday. So Friday is where now you have the actual data. So when you open the folder for Friday, you can see is the change in the number of employed people during the previous month. So here it's not about the forecast, but this is the change of the number. So it means through what we had today, on a Friday, on a Wednesday, we expect probably on Friday, NFP might be negative for USD. Okay. So this is the estimate, probably a forecast of what will happen on Friday. But those who have been in the market can agree, sometimes they do differ. On the estimate, it might be negative, and on the actual data, it might be positive. So this one will help you forecast on what will happen on Friday. Okay. So let's finish on this, then I'll answer your questions. So let's go to the chart and see how this data, the today's negative data for USD, affected the market. So allow me to switch to MT5, MetaTrader 5. So in a minute, I share MetaTrader 5, my MT5. Okay. In a minute, kindly I share the MT5 so that we can see how the today's data affected the market today. Of course, today we expected US dollar to be weak, to weaken. There's the MT5. So I'm going to start with Australian dollar, a US dollar. Okay. So with Australian dollar, US dollar, we understand that, if you can see the chart, we understand if you trade in Audi USD, Australian dollar being the first first currency in a pair is called the base currency, and then US dollar being the second currency in a pair is called quote currency. And we said in our introduction, if the quote is weaker than the base, then the graph will move on an uptrend. And if the base is stronger than the quote, still it moves on an uptrend. So today we saw US dollar weakening due to those or even due to negative economic events. So at around 3:15 to 3:30, we can see the kind of movement that we had. So actually we had a movement of around 500 points, which adds up to 50 pips. So if you understood today clearly how the negative employment, the ADP, the negative ADP, how it affected US dollar negatively, and you were trading Australian dollar, US dollar, then you could have been able maybe to make something from here, from the 50 pips. So even if you couldn't have managed to get the full 50 pips, probably you could have maybe half of it, 20 or even 30 pips. So we had a strong buy due to negative ADP data. Okay. If we go to pound USD, you can see again pound USD had a very strong buy. We had a very strong buy. Okay. We had a strong buy at around 3 again. So on pound USD, we had a buy of around 80 pips. Now this one was strong. This was a buy of around 80 pips. So it means somebody who understood what was happening clearly, then probably you could have taken a trade here and you could have made some pips. So we had 50 pips from Audi USD, around 80 from pound USD, and still the same case on Euro USD. We had a very good buy. Okay. So on Euro USD, it was a move of around 60 pips. Okay. Yeah, this was after employment data, after the ADP. And it's good also to understand that US dollar is negatively correlated to gold. If US dollar is weak, then we have gold moving on an uptrend. And if US dollar is strong, then we have dollar moving on a downtrend. So this is why we had some good buys again today on gold, because we had a weak dollar. So the weak dollar made gold to have some buys. I saw some guys made some good profits from that. Okay, so that is how the employment data tends to affect the prices. And you can see it did cut across the board, from Forex even to special metals. Okay, so that is how you get to trade these assets. Now I'll try to answer your questions. I think I have already answered for Victor. So we had J Squad TV, who was saying that after how long do we stand put to ensure that we have got the market direction? This is a good question. Because we have so many traders wondering, do I have to keep on the to be on the screen to wait for the news to be released immediately, and immediately the news is released, you can take a trade? Okay, at that point we have different type of traders. There is one trader who will open a trade even before the news is released. Probably they have done an analysis and they have the expectation. And we have traders who will wait for the data to be released. Immediately it's released, they can open a trade. And we have other traders who wait for the news to be released, a market settles, and then they take a trade. So by the end of the day, what I can say is, for economic factors, they give mostly the general direction of the market. So even if you won't be able to get a trade immediately, even after some few minutes, even some few hours, I'm sure you'll get an opportunity. You can wait for a retracement and then you can take a trade. So I think that question is well answered. You are the one to decide. Will you take the trade before the news? Will you take the trade immediately the news is released? Or will you give news some minutes? Let the price settle, and once it settles, you take a trade. All can work as long as you know the direction. Okay. Then we still have J Squad saying NSE has lost over 1 trillion in the last 1 year. Okay, and foreign investors are leaving, including the Indian sugar. Yeah, I think we all know about that story. Yeah, it all adds up, even to the employment data. I think by now everybody is complaining about employments and such. Basically, yeah, if you do a keen analysis, you'll understand maybe we have some negative economic factors, and that leads to even the Kenyan shillings probably weakening. That is why at the moment we are at 150. So until those factors change, then we'll see a positive, or even we'll see a strong Kenyan shillings. But if things remain to be the same, then by the end of the day, we'll see a negative, or even we'll see a weak Kenyan shillings. And as we can see, investors are the ones who create a bigger demand for the Kenya, or even for a particular currency. Yeah, so I think that one is well understood. Then we have Liz Wanjiro. I please repeat on quote and base currency. Okay, so that is very important again when you are trading, because if you have a weak currency, and you don't know the position of maybe the currency, or you know the position of the currency, but you don't know how it affects the side or even the direction of the market, then you might end up making losses. So whenever you have a pair like Audi USD, then the first currency in a pair is known as the base currency. So whichever currency that you trade, the first currency in that pair is known as base currency, and the second currency in that pair is known as quote currency. And the value of the base currency remains 1. It's good to note that. So whatever will be changing is the exchange rate, or the value of the quote currency. So if we have a graph moving on the upward direction, it means you need more and more of quotes to buy the base. If the graph is moving on a downtrend direction, it means you need less and less of quotes to buy the base. So since we saw US dollar being weak due to negative ADP data, it means we needed more and more and more of, so we needed more and more of US dollars to buy the Australian dollar. That is why we had a graph on an uptrend. So you are supposed to take a buy, and that is how you make your profit. But if the data supported US dollar, then we could have seen a downtrend. And during that point, you take a sell order. Okay. So I think, Liz, that one is somehow explained. So you might also want to visit maybe some introduction sessions to understand it better. I think that is the most important basics you can go through about the base and quote. So with the data that was released today, there is that probability that even on Friday, we might have a negative NFP, or even if it will be positive, not that positive. So that was much of an estimate, a forecast of what we'll expect on Friday. So, all right, traders, I think that is it for today. Thank you very much for attending the session. So kindly every day before you trade, make sure you keep an eye on the economic calendar. You understand each and every particular event that will be released, be it employment data, be it interest rates, be it inflation data. Get to understand how it will affect the trade or even the asset that you are trading. Thank you, Liz. I can see you appreciate that. Neverson, we still have 2 minutes, but I don't understand what you are or which question you want me to repeat on. Is it still on the base and quote? Okay, so what happens when a currency loses value? It's basically the direction is determined by the position of that currency in a pair. If that currency is the first one on a pair, then okay, let me start again. If you have Audi USD, the first currency is the base currency, and the second currency is the quote currency. The value of the base currency remains 1. It doesn't change. What changes is the value of the quote currency. So if the currency, if the first currency, which is base, gains strength, then it means you will need more and more of quotes to buy that base. So we will have a graph on an uptrend, meaning we will need more and more of quotes to buy the base. But if the base gets weaker than the quote, then we'll have a graph on a downtrend, meaning we'll need less and less and less of quotes to buy that base, which is getting weak. So what you can do, you can go to the economic calendar, analyze those events. Once you analyze the events, then identify or even know the position of your currency in the pair that you are trading, because you can have Audi USD. At this point, we'll expect the graph to move on an uptrend. But if you have USD CAD, then you won't expect an uptrend. As you can see, you will expect a downtrend, and that is what we had. So if you are not aware of that, you might find yourself taking a buy where you are not supposed to take a buy. Yeah, you have the right information. A certain currency is to gain strength, another one is to depreciate, but you take the wrong order because you don't understand about the base and the quote. So that one is very important. Thank you, Robert Kimtai. Thank you, everyone, and I appreciate for your attendance. So kindly, if you have any other question, you can still follow in thank you, Neverson. At least you have got to understand that one. We'll still have more sessions, probably with other trainers. Make sure you attend. If you have a question, you ask the question. And if you have time, you can still visit us in our offices. For me, I'm based in Kitengela. So if you're around Kitengela, yeah, you can pass by. I can explain more. If you're around Nakuru, we have an office there, Eldoret, Thika, Eastleigh, and even Westlands. So thank you, everyone. Have a nice evening.